Hour of TheoTrade. I am Professor Jeffrey Bierman. I am broadcasting you live from Chicago, and it's unseemly warm today at 45 degrees. And today is Tuesday, January 6th, 2026. I got 2 days to go for my 61st birthday, but I'll take this as a birthday present because when you walk in and see all 18, 19 trades going your way except one, you know it's a good day. So let me say hello to the usual suspects, but no disrespect. I've got way too much to say, and I feel like an hour will never do me justice. So hello, Rosario, Rogue Bro. I don't know why people call you Raj Bro. It's Rogue Bro. Stingray, you're new. Kevin Press, John O'Donnell. I see the usual suspects. Hello, Chicago Dave, Doug B, Bart F. Hello to everybody, okay? I can't say I saw this coming because I didn't, but at the same time, I can't say I'm not surprised because the markets are broken. They're basically run amok by call buying retail people and chasing performance and disconnected from everything that matters that I teach at Loyola and DePaul. Welcome to the new market, because once it doesn't work, you're never getting out of this stuff, because on the way down, you're going to all be exposed. And I'll explain by just using Roblox. I'm the guy who told you Roblox is not even worth $30. Anybody pay attention to me? Because Roblox is almost down $100 now. You listen here? A lot of you are buying stuff here. You better have an exit strategy, because if you don't, it could be the end of you. With that said, I will pick up the second part today to do the Bierman, the professor, prospective market calls. I did 5 bullet points yesterday. I'll give you my other 5 bullet points today and a follow-up. Let's get to the story at hand. Okay, so every day I come in here for you new people. I've only got 876. That's an all-time low. We should be over 1,000 by now. But I'm going to call the theme coiled spring. Coiled spring. Everybody know what a coiled spring is? Do I actually have to bring in, and I'm going to do it anyways because I just don't care. I'm going to bring in some type of like what I call graphic aid. A graphic aid. People like, he's bringing a graphic aid in here? Why is he bringing in a graphic aid? Because I want to. Everybody recognize the coiled spring? There's your coiled spring right in the middle. That's a flat wire coil spring. For those of you who are what, like plumbers, engineers, and electricians, or you're just like engineers, period. Coiled spring and a wave spring. Well, we're talking about a coiled spring today. Anybody know where I'm going with this? Hey, Andy man, Grant Energy, where am I going with this? Because every time I come in here with a theme, there's a method to my madness. And it's like I'm trying to like completely depict and stylize in your brains what the hell is going on here. All right, so people like, what is a coiled spring? I'll bring in the definition. According to Collins Dictionary, it is a mechanical device made from elastic materials, typically metal wire, coiled in a helical shape. It's designed to store energy and release it, absorb shock, or maintain a force between contacting surfaces. So when a load is applied, okay, the spring can compress or extend, returning to its original shape once the load is removed. A lot of you own what? Mattresses, I hope, unless you're sleeping on the street. You have coiled springs in your mattresses that absorb the shock. When you get off, it releases it. Where am I going with this? Rogue Bro, Guatemala, Rosario, where am I going with this? You're in a coiled spring environment. Wake up, TheoTrade members. Don't trade. Well, I'm having a monster day. Don't trade what you think. Trade what you see. So let me bring it directly to you. First things first, the Genesis COG, which tomorrow we're going to do a Genesis COG spotting, and then we're going to start out on Thursday with a brand new coaching session, and you have no idea where I'm going to go with it. But let me give this to you, okay? The Genesis COG, the reason why we never get burned is we never short on the way up, and if we do, we better know what we're doing. So 99% of my trades, I'm like, just let it go. I'm not shorting this. Go for it, all of you. Prove me wrong and short it. I defy you. Because you're not trading with people. You're trading with machines that are being jammed higher by retail people. You see the MACD going up. You see the accumulation distribution starting to pick up over here. and you see the RSI moving up and you think you're going to make money, good luck. You might. You better run out of gas at some point. But I'm going to take you in a place where you're going to learn something technically about how markets operate. Even you veterans are going to learn something from this. So let me bring up the 3-month daily. Okay, let me explain this to you. This is your algorithmic defending channel. That's an algorithm that's buying on that linear regression line. They're buying it on the line. Okay, so it dips, they buy, they run it up. Then it hits a prohibitive level and they walk it down to the trend and they run up. Okay, this is the new market. This is how it works. But here's the thing. You're now up against what we call in this business an ascending triangle. It's an ascending triangle. It's a coiled spring. So here is what I'm going to tell you. I don't know what's going to happen tomorrow. I'm dumb as a bag of rocks. I don't know what's going to happen today. But I can tell you one thing. I know what's going to happen right there. At this point, the market's going to make a move. And one of two things is going to happen right there at the apex of that ascending triangle. One of two. Either we're exploding higher and we're going vertical and the shorts are going to get destroyed, or you're going to lose everything, you longs. One of the two. Now, here's the thing. That's the prohibitive resistance. That's the prohibitive defense, or what we call the support. Once it gets there, it'll make a move one way or the other. I don't know where it's going, but the statistics dictate this. According to the Bulkowski classic definition of research, of which he did 10 years of researching candle patterns, 10 years, and he converted those candle patterns into probabilities and outcomes. You have a 64 to 66% chance of that breaking higher. Translation, you have a 1/3 probability that that fails, rolls down, and blows chunks. But you have a 62/3 probability that that rolls up and rolls higher. How much higher? Nobody knows. But going down, you know. The thing about the market is when you look behind, you can automatically tell where you're going to go. You just go back to the place where you came. But when it breaks to new highs, sky's the limit. It could go up 1 point, 1,000 points, or 0 in reverse. It's a lot easier to predict the downside than the upside if it fails. So if it goes, make sure you have a game plan to get out of this. But if it fails, here's the thing. Make sure you have a game plan to get out of this, because it's going to blow and it's going to drop all the way to 66.36 on Q. And whether it holds there, I just don't know. But this is what's happening. Ascending triangle, coiled spring. There's the theme of the day. Now, without further ado, let me get into my macro moves of the day. Okay, give me a chance, people. Give me a chance. Hang on. I've got a lot of screens open because I have a lot of computers and monitors. So here's the thing I want to throw out at everybody this morning. Okay. So my first story, and I would love to get some feedback from you, because if you hate it, I don't care. But if you love it, let me know. Because I'm like Uncle Leo from Seinfeld, where Uncle Leo goes into the bookstore and he steals a book. And Jerry's like, "What are you doing?" And Uncle Leo goes, "They can't arrest me. I'll just claim I'm an 80-year-old man and I didn't know what I was doing. And frankly, I don't care." That's me now. I'm at an age where, like, I'll be 61 on Thursday, and people like, "I'm going to criticize you. Go ahead. I don't care. It doesn't, nothing affect, water off my back. Don't care. All I know is all I got to do is deliver. And I'm delivering for the Genesis Cog. But here, I'm going to leave it in your hands. Careless whisper. Anybody know where careless whisper comes from? Anybody out there? Bueller, TheoTrade? George Michael, Andrew Ridgeley, Wham? It's their biggest hit ever at Wham that put them on the map. Careless whisper. The joke goes like this, because here's the translation. We're getting a jobs report tomorrow and another one Thursday. You know what the market's saying? We don't care. That's because the market no longer reacts to fundamental news. Fundamental news has no impact. So if you spend your day saying, "I care about fundamental news," you don't understand the current market. The market doesn't care about macro news at all. Because if it did care about it, what would it do? It'd actually back off. Because if it backs off and the news is good, it can rally. And if it back off and the news is bad, it can still rally because it's already priced in a bad report or a contrary report, what it's looking for. At this point, the market's going, deliver the jobs news. We're not interested. That's what the market's telling you. So they could have a terrible jobs number. The market's like, that's great. He's going to cut rates. It's a great jobs number. Well, that's great too because the economy's strong. It's like a win-win situation. The market's already made up its mind like the news just doesn't matter because every piece of news is a winning news now. For now. Follow my lead on Roblox and you won't think the same thing. They're going to kill all these stocks eventually. You just make sure you get out in time is what I tell people. Second one, another borrowing from shrinkage. Everybody know where shrinkage? Yeah, who got the wham? R.S. Howski, you nailed it. J9 wham, Frankie wham, good for you. Shrinkage. Everybody, where does shrinkage come from? Come on now. It's got to be one of the top 5 Seinfeld episodes ever, where George goes to the beach, he goes into the water, and obviously you know that his package shrinks, right? I use the word shrinkage for this reason. The pool, exactly, Chicago Dave. U.S. factory sector contracted, not contracts as in buying contracts. I'm talking like not a noun, but a verb. The verb says it's the 10th straight month that the U.S. factory sector is shrinking. So the economy's getting weaker and weaker on the manufacturing side, but don't worry, the service side will carry us. No, it won't, because the service side is being replaced by AI. So people are going to be laid off. They're going to be displaced for good forever. So this is technically recession news. Let's rally. The market's not listening. Like if I could redo the title, I would call it Deaf, Dumb, and Blind, but that's offensive. Or I could call it like the monkeys, hear no evil, speak no evil, see no evil. The market's not paying attention at all. It is utterly broken from traditional design. There is no quote unquote pricing mechanism. All of you, you're purely gambling nowadays. If it pays off, congratulations. Just make sure you get off the train in time. That's all I can tell you. Last but not least here, okay? This is like, that should be worrisome. We don't care. That should be worrisome. We don't care. Okay, next. Time on my side. This is where I'm going to, I love Lane has a hilarious response. This is, to me, is not negative. If ever there was a shred or a silver lining of good news, that's it. And you're like, how could that be? Ray Dalio is probably one of the 20th richest guys in the world. He's the CIO, and founder of Bridgewater Associates. I interviewed there. I did. I interviewed on the phone on Zoom to Bridgewater Associates. I did. Didn't get the job. Whatever. Couldn't care less. Bridgewater is the largest hedge fund in the world. It's in Greenwich. It's got its compound. Ray Dalio is a little bit kind of like, he's a legend in his own mind. I'm not knocking the guy. He's really smart. He's way smarter than me. But Ray Dalio made a sentence to me that is as bullish as it gets. Dalio said, quote, the AI boom. Okay, so he admits there's an AI boom. Yeah, we all know that. We know it's taken over. It's in the early bubble phase. What's the key word here, people? Early. Early bubble phase. So Dalio's telling you, we're in the 3rd inning of a 9-inning game. That means time is on your side to actually go in and buy more. This makes me want to buy more. And I missed it. And I'll show you. You have Micron running. You have SanDisk running. You have a lot of AI stocks running, just running up today because of an upgrade and because of some good news. So if ever there was a bullish news, that's it. So when I get to that point is, we're going to have a correction at some point in the first half. It's a done deal. But I don't think it's going to end. I think it's going to end and going to bounce hard because I think a lot of people who miss the AI trade are going to go down there and say, damn, that stock was 170, now it's 100, and they're going to go in and buy it. So the AI trade is not dead. The AI trade is alive and well. It's just you got to figure out where to pick your spots. But what Dalio is saying is AI's in the early bubble phase. that means he's tacitly, indirectly admitting that there's more upside to technology because it's in the early. If it were in the late bubble phase, then I would say, hey, Ray, what do I need to short? What he's saying is because it's in the early bubble phase, you can keep buying all the hell you want because people don't sell in the early bubble phase. They sell in the late bubble phase. Nice going, Ray. We know we're in an early bubble phase, but this is a master of the obvious. I'm not picking on the guy, but what it does is it opens it up for me to think, well, when there's a correction in AI, I will pick my spots and find out what I want to buy from technology. Okay. Let me move upward and onward, okay? More like widespread ignorance. Good point. All right, so let's talk about individual stocks. Chips Ahoy. Everybody remember Chips Ahoy? Who makes Chips Ahoy? Does Mondelez International make Chips Ahoy? Is that right? Does Keebler make Chips Ahoy? Who the hell make? I got to look this up. Somebody's making Chips Ahoy. I'm pretty sure it's Mondelez. Okay, it's got to be some like smaller company. Chips Ahoy manufacturer. Who the hell is making this? I'm looking this up right now because I'm bothered by this. Yeah, I got it right. Jeopardy. My daughter won the Jeopardy championship yesterday in her class. That was awesome. Yeah, Mondelez makes Chips Ahoy, MDLZ. So here's where I'm going with this. Thank you, Kevin. It's not Keebler. So MCHP makes semiconductors. A lot of companies. There's hundreds of semiconductor companies, but you got to pick your spots. You got to know what you're trading, know what you trade what you know. So here's what I'm seeing today. Ready? So MCHP is up a whopping $6. Okay. Now, Genesis Cog has certain rules. We don't short on the way up, so that's unshortable. Okay, if we can help it. We also don't short sacred cows. What's a sacred cow? Microsoft, Tesla, NVIDIA, Palantir, those are sacred cows. This is almost a sacred cow. I don't short technology. That's why you never see me get burned like this. Okay? But here's the thing. News matters. This was just stuck here in a flag formation until what? The company, not me, the company came out. Microchip insiders boosted sales guidance. Oh, like that's going to make the S&P come down. Sometimes you got to give it to people. And I'm going to give Gianni props here. Gianni and I disagree on everything except one thing. Mr. DePoacher, Mr. Versace, Mr. Detroit Rock City, and I agree. If semiconductors are up, the market's never going down. That's not going to happen. Semiconductors are the most important tech sector, okay? This is a prime semiconductor stock. Nobody cares what the value is. They do connected, secured, embedded controls, 8-bit, 16-bit, 32-bit, 64-bit, mixed signal microcontrollers, mixed signal microprocessors, microcontrollers, automotive, industrial computing. Okay, this description is so thick, if you're short, you're screwed. If I were you, I'd retire. I'm only bringing this up for one reason. Because if this is up, everything else is up. You want me to prove my point? $58. Should I keep going on, TheoTrade members? Micron up 19. One stock reports better than expected sales guidance in semis, and it metastasizes. It's literally like, all ships rise and fall in the same tide. One reports and they all follow, and there's a gamma squeeze. This is how retail traders are living. Now, institutions won't buy that, but retail traders will chase that with calls and circle the wagons. I advise you, if you can help it, try not to short semiconductors on the way up. Try not to short semiconductors now. Wait until there's a change in psychology and wait until there's a change in the SOX. The SOX is up another 2% to an all-time high. This is not a market you want to short, especially when it looks like that. Now, how is it that I'm cleaning up and making so much money? Because I don't short stuff like this. I don't. I short stuff that's going down. Like I covered today this. That's my short. Want to see what else I'm short? I'm short that. I'm short stuff that goes down. Don't short technology stocks on the way up. That is my mission, my lesson. Learn from me. I got 38. I'm on my 39th year. I've lost plenty to tell you what this is like. You'll lose a lot of sleep. Don't short on the way up. You don't have to chase it. Just don't short it. Make sure, okay, that you short on the way down and you know what you're shorting, because that stock alone just lifted all the semis. That tells me the market, it may go down. That may go down, but not technology today. That ain't going to happen. All right, next on my list. Snap, crackle, pop. I'm in like a weird festive mood today. I don't know why. Snap, crackle, pop. Everybody remember where that comes from? Rice Krispies, snap, crackle, pop, like food, General Mills. What is it like? Where am I going with this? Kellogg, snap, crackle, pop? Pay attention to what stock I'm talking about. Talking about Qualcomm. What's Qualcomm? Qualcomm is in the semiconductor business. Now, Qualcomm doesn't compete head-to-head with Microchip, but it's in the semiconductor space, which means if you're short, you're screwed. So why am I bringing this up? It's up another $5 today. It's moving in lockstep, correlated to, obviously, Microchip and the news. But there's something else afoot here that you're not seeing. The reason why the stock is up today is because they have a new microprocessor chip out. The microprocessor chip is called Snapdragon. Very like preppy, cool, edgy name. Snapdragon. They have Snapdragon X2 Plus CPU. It's set to arrive in the latest laptops in the first quarter of 2026, and it promises to be 35% faster and 43% less powerful, and a big boost in AI performance versus AMD and versus Intel. Get with the program. Their gain is Intel's loss. So if you're doing a pairs trade, this is an opportunity to get long this stock while at the same time getting short Intel and throwing your hat in the ring and see how it plays out. I'm telling you as a professional, this is how you do it. You buy the strong, you short the weak, and you let it play. What I'm telling you is you can't step into this market or any market ever and think you're a friggin' genius by going like semiconductor word association, me buy, like a simian ape. Don't do that. I kid you not. You got to do research. This is the year where research, if you don't do it, is going to burn the crap out of your portfolio. I can assure you. You can't buy just any semiconductor. I'm telling you, Qualcomm's gain is Intel's loss, and it's going to put a little bit of pressure on Advanced Micro. Do you see that? It's down because. Don't give me this crap because. It's not down just because. It's down because there's a pairs trade going on. They're long. The professionals are long Qualcomm. They're short AMD, and they're playing that pairs trade because it's a war of speed of processors to catch up to the AI boom. You heard it from me first. I won't be the last to tell you. I'm just trying to help you out with the trade here, people. That's my goal. Help you out with the trade. Okay. Next on my list today of individual stories. Boss Baby. Anybody know where Boss Baby comes from? Come on, people. Give me Boss Baby. Where has Boss Baby come from? Yeah, Boss Baby's like, what is that, a Disney movie? It's a really funny movie. I think it had Kristen Wiig and who did it have? Alec Baldwin. It's a movie, right, Mark O'Connor? Everybody go look up Boss Baby. It's a hysterical movie. Why am I bringing up the term Boss Baby in reference to meta platforms, or I call Zuckerberg University or Facebook? Anybody have an idea? Let me explain that. Let me explain you something. Okay. Got a guy in my gym who looks like Desi Ricardo, scares the hell out of me. We call him Demonic Desi. He scares the hell out of me. All right, let me bring it to you. Let me give you a trip here, okay? Get out of Meta. Get out, Rock. Get out now. I'm giving you the word up. Word up, people. Garrett Baldwin. I love Tesla. Hate Meta. Hated it. Get out. Why? Meta, if you did not know, is being run by a 29-year-old kid who runs the entire AI division. And right now he's getting backlash and criticism from the inside. It's leaking all over the place, people. It's everywhere. Zuckerberg hired, I know it was Zuckerberg himself, the human resources, in their infinite wisdom, decided to hire a 29-year-old to run the AI division. And the word on the street is he's making all the wrong moves and pissing off all the wrong people and going in the wrong direction. So why is Meta not rallying with the NASDAQ? Why is Meta not rallying with the S&P? There's your answer. Because there's turmoil inside the company. How did I know that? Because I did the damn research that a lot of you won't do. Do the research. Figure out what's going on, what's going right and what's not. You cannot rely upon call buying forever. You cannot. It will fail you. And you can't rely upon I'm going to look at a chart and make a decision. What a waste of time. How well is that working for you with Roblox? I'm the one who told you Roblox is not even worth 30 bucks. I came out one day about 6 months ago and said Roblox ain't even worth 30 bucks. Now you listening to me? Because I was an analyst. I ran a hedge fund. I'm a fundamentalist, and I'm also a finance professor. It ain't worth 30 bucks. Know what you're trading and trade what you know. I come on here every day because if you don't know, that's what's going to happen to your portfolio. That's not about Roblox. That's about people who figured out that the company's virtually worthless. They figured it out. Don't chase charts. I'm telling you, don't chase Meta. It's a terrible mistake. Meta is on the verge, if it takes out 600, of finally breaking down and becoming just another run-of-the-mill company, which is Don Kaufman's like birthday dream. Next on and last on the list today, I call this one the Berkshire baptism. Okay, everybody knows what a baptism is, but Berkshire got baptized today. So Warren Buffett, long gone. It's now been taken over by a younger gentleman. He's not that young. He's in his 60s. He made a trade. He made a trade today. Anybody curious what trade he made? He loaded the boat on Under Armour. So the new CIO, I'm going to have to get his name. Who's the new CIO? So I get this. I don't want to look ignorant here. I dropped his name the other day and I forgot it because I have so much on my mind. New CIO of Berkshire. Come on, I got to get his name here. His new name is Greg Abel. Greg Abel. So Greg, hey, man. He loaded the boat and did a lot of buying. And they're filing that 13D on Under Armour. They believe Under Armour is fundamentally cheap. Well, we'll see about that. The company earns 4 cents, okay, a year. That ain't fundamentally cheap, Greg. You can go down and you can break up the company and look at its book value, and then I'll tell you, Greg, whether or not you've made a deal here. So let's go to the book value of Under Armour. Look at the company. They're losing money. What's the Bierman rule of thumb? Come on, everybody. What's the rule of thumb, Rosario? We never buy companies that don't make money. That's why we don't lose money. They don't make any money. They're going in the red. Not interested. But if I look at the book value, it's worth $438. Hey, Greg, that's what it's worth. Greg, I will bid and I will buy your shares at $438 because I can buy the company, I can liquidate it and get $4.38 for the capital structure. That's what it's worth. I'm not buying this company. I'm not criticizing Greg Abel. I'm not. I'm just trying to, again, push my agenda. You better do the damn research. That company ain't worth $5.24. He's buying that company based upon what? Cash flow. They're not cash flowing. He's buying that company based upon growth. There's no growth. They're in a reorg program where they're trying to shrink and compress. I wouldn't buy that stock with your money. I wouldn't do it. There's too many players out there. There's Nike, there's Adidas, there's Pumas. They don't need this company. Under Armour, love the product. I own Under Armour products. I'm just not bidding $5.38 for this company. Good luck on that one. But they are loading the boat. Maybe I'm wrong. Maybe they'll double their money. Don't care. I buy stocks that make money, so should you. Next. All right, let's go back and let's go. This doesn't matter today. What matters today is we're going to go into he's been there for 10 years. He came from our subsidiary companies. Yeah, that's fine. I'm not calling him out. I'm just saying I wouldn't buy it myself. I'm allowed to differ my opinion. So this is what we're doing today. We're picking up the last 5 bullet points of my calendar year 2026 prospective market moves. Yesterday, to recap, I said I think market breadth will significantly broaden as the year goes on. Number two, energy stocks will make a surprise comeback. And so far, my energy stocks are absolutely killing it because I own Schlumberger, sold half yesterday, still own Oxy, still own Chevron. I'm making money, people. Quantum computing stocks will overtake AI tech stocks. AI will be in the it's not passe. It's just that quantum computing will take the lead and be a much more of an outperformer than AI will. Defense stocks are poised to perform the averages. Raytheon was upgraded today. Anybody see that? Raytheon was upgraded. What did I tell you? I told you defense stocks are going to be hot this year. If I were you, when the defense stock's correct, I'd be doubling down and loading the boat. Lockheed Martin, Northrop Grumman, General Dynamics, that's where you want to be, people. Trump is serious, man. He's going to build up the military and create a moat around the US. That's what you want. Last is expect at minimum a 10% correction at some point. Once we get beyond 10%, likely we'll overshoot to 15%, maybe even 20%, but probably not much more beyond that for the year. All right. Number 6 on my calls for the year. And they're not what I call like bold. They're not fringe. They're not radical. They're realistic. Like a bold call would be, I see the market falling down 1,000 points to 4,000 points. Okay, at that point on Theo, Hoffman's going to fire me. That's not going to happen. All right? I'm just trying to keep it real. Up your exposure to hard asset stocks. What the hell does that even mean? Want me to show you how the Genesis cog is just printing money like an ATM machine right now? Because we're all shifting to hard assets. We're early on some and we're right on time for the others. So in the Genesis cog, what is a hard asset stock? That's any stock sector. It's a sector. Or if you drop it on your foot, oh man, it hurts. Lumber, wood, glass, jar, steel, cars, robots. I don't care. If you drop it, it hurts. This is the year where I'm gonna say it exactly as Blake and Brandon and Garrett say it. This is the year where real assets, things you can touch it. It's palpable. It's not imaginary, or it's not what I call it's paper. It's real. This is the year of real assets, and you better get with the program. So here's what we own. Genesis Cog buys ball at 45. Look what's happening, people. You're late to my trade. The Genesis Cog members are on it. Are you? People, it's going to go for a while. Stock's cheap. Hard assets are the place to be. What does Ball Corporation do? Largest maker in the world of jars, aluminum packaging, jars, containers for soft drinks. It's a monopoly, people. They're going to run for a while. I own them. Am I selling them? No. They're not expensive enough, and they're not overbought enough. They've been kicked to the curb, and when you kick it to the curb, your trash is my treasure. All you money managers who panicked and sold this, you're making me rich so I can put my kid into Yale and Harvard. Thank you. This is it, people. Buy hard assets. Things are commoditized to a degree, and get on the monopolies. What else have I got? Okay, start looking at Nucor Steel. Oh no, I missed it. You did. This is a little bit too far for me to chase, but man, at that 125 level, looks good. Get stuff you use, you touch, you can see it. I'm telling you that right now. Garrett's right on this, man. Hard assets, even byproduct hard assets. What does that mean? Get on board that Oxy, people. Get on it, because when it goes into the 60s, I'm going to come right back into and say, I told you so. This is one of those stocks that's just cheap fundamentally. And the fact of the matter is, oil byproducts go into everything. They go into my monitors. They go into my cars. They go into plastics. Everything. The polymers all come from oil, people. You're seeing it now. Plastics, everything. Get on the hard asset train with me and ride it, people. That's what I'm trying to do right now. That's how I'm playing this, people. Okay? So again, hard assets. You can go down to lumber. You can go down to wood. There's a lot of stuff. You can go down to packaging products. There's too much out there for you not to go out and seek it and buy it. Want to see another one? Caterpillar. Okay. It's run too far. Comes down to 400. It's a buy of the century. Caterpillar, Deere, Komatsu. Okay. There's a lot of them out there. They're just sitting out there for the taking. You just got to be patient. Be patient and buy them. There's another one of those hard assets that's going up. Told you. This is the year where people like move out of paper, get out of the financials. Don't buy into that stupid like Madero crap where the banks are going down. That's just garbage. The financials they're fully priced. They're going to come down and correct. There's no more interest rates coming because I'm going to show you. And then they're going to go, where are the hard assets? Exactly. Because hard assets hold their value. And they're going to come in short supply. And supply and demand means the price goes up, the margins go up, and there you're going to get rich. That's my call. You heard it. All right. Let's go to number 2 of 5 today. Mega cap tech stocks. Mega caps. You know who they are. The Mag 7 plus Avago. They're going to reset. They're going to reset in the first half of the year. I've got 6 months, so you can come at me. I know a lot of you guys are like going after Kaufman for making some calls on financials a little early. That's okay. I'm not shorting financials just yet. The only financial I'm short is Bank of Hawaii, and that's not going anywhere. So, again, the mega cap tech stocks are going to reset at some point in the first half of this year. So who are the mega cap tech stocks? Who are they? What are they? Let's just bring them out. And here's Johnny. I feel like I'm going to be like Bob Barker with like Diane Parkinson. Bring it out, ladies. Okay, so here we go. You're going to see Meta. Meta's going to correct a lot further than this. I think it's going to work its way all the way down, maybe to 485. That's one of your mega cap tech stocks. I think NVIDIA is toast. I think you guys are kidding yourself. NVIDIA has what's known as a bearish divergence. And in the world of bearish divergences, what's the rule of thumb at the Genesis Cog? Because we do it right. We short on the way down, down to the down. We don't short on the way up because we don't let algorithms eat us alive like they eat other people alive. Just call any Genesis Cog member. Ask them, have they been burned badly? Nobody's been burned. They've lost money on trades, but nobody's like, oh, I'm down 80 points. Won't happen. We don't short on the way up. It's a mistake. It doesn't work. Bearish divergence, bearish divergence. You're going to see, they're not going to crash. Stop. You naysayers, you chicken littles, zip it. They're not going to crash. They're just going to reset. And they're going to reset so you can buy them. You're also going to see Avago Broadcom eventually reset. That's going to reset. Okay. You're also going to see Microsoft go lower. They got nothing going. That's working its way lower. Look, oh no, we're good. Microsoft will work its way below 400. And when it gets down to like 355, step up into the plate and double up. Just load the boat. Buy right there. There. Right there, people. Okay. Give it time. You can't have a stock trading at 33 times earnings. It won't work, people. It can't last unless you've got some like growth spurt, and there ain't no growth spurt. So all these mega cap tech stocks, get ready. The only one that's not is this one. I don't think this is going to reset, but that ain't a tech stock. That is partly a tech, but it's much more. They're much more diversified. They're more of a conglomerate than they are a tech company. I also think you're going to see Google do a reset. Google's setting up for a reset. It's very pricey at 31 times earnings. And I think you're also going to see another reset on Netflix even lower. I think Netflix is going to find itself maybe down to that 60 level. I know it's a 10 for 1 split. So all your tech stocks expect some type of reset for 6 months. Let them drop. You can write them down. You can buy the puts. You can defend. They get down to 50% retracement, even a 38.2% retracement Fibonacci. Step in and buy the suckers. All right. Next. I got to save my energy. I got a Genesis Cog in a half hour. Curb your expectations of index performance returns. I said this last week, and I'll repeat this, and I'm going to get me a bucket. Miles Cowperthwaite, I'm going to throw open a bucket. So that's a joke from Saturday Night Live with Bill Murray. Miles Cowperthwaite. I'm going to swallow my own vomit. All these strategists, just put a muzzle on them. Stop. Okay, stop calling for 21% return. We had 25, 25, and 18. What the hell do you want? 25, 25, 17. Be realistic. Curb your expectations. I'm not calling for a down year. I'm just telling you, like, if we have a down year, I'm like, yeah, it should be that way. But the idea here was we've already stolen the future. The future's already stolen. Like Brandon Chapman ruined it for me. The future's ruined. We're 5 years ahead we're 5 years ahead, people, on the market. 5 years. We're 5 years early today. Right now, we're right now where we should be in 2030. Right now. So for those of you who think that we're going to repeat this, okay, you're delusional. We're going to 9,000. No, we're not. Okay, this is a massively overbought market. It's massively overbought. Okay, 1805 to 7,000. So you're up in a period of about 10 years. 10 years. You're up about 500 or 600%. If you annualize that, you're starting to look at compound annual returns of 20%. And you all know that's a function of one thing. The Fed. The Fed just keeps pumping money, and the money managers make up fake rules. Value doesn't matter anymore. 1,000 times earnings, and let's upgrade. It's making up crap rules to justify this. It's confirmation bias. Be realistic. Take a look at this. Wrap it around with the Bollinger Band. Wrap it around with the standard deviation channel. Just do it. And recognize that right now, the Tobin's Q is 2.16. It's 100% overvalued on Tobin's Q, which is kind of like passe and old-fashioned. You have most tech stocks trading at 35 to 40 times earnings, and historically, they traded about 20 to 25. You've got a lot of financials fully priced. Just be realistic. Just curb your expectations and say this. This is how I've set my expectations this year. This is me personally. My goal overall, if I can squeak out 15%, because I'm a stock picker, if I can get 15% pulled out, I'm happy as a stock picker. But I'm looking at the averages and thinking to myself, I might be lucky to squeeze out 10 to 12% this year. I think the S&P this year is going to be flat. I think that when you look at the historical returns and you go through John Hussman, he's a perma bear, I give it to him. You got to be realistic and understand, like, you can't keep up this pace. Just go along the line itself, connect the lower highs, the higher lows, pardon me, and just look and recognize where you are. Bring forward, if you need to do it, like a standard deviation channel. Just curb your expectations, okay? Could we go to 8,696? Sure, it says so. But you're already in a massively overbought here, here, and here. It corrected here at the 73 level. It corrected here at the 79 level. It corrected here at the 86 level, and that was back in 2017. Okay, you're now at a 76 handle on a monthly. I'm not even looking at a weekly. I'm looking at a monthly. All I'm telling you is, don't expect the market to be up every single year until you're dead. Don't wake up every day and go, I've got 45 years to live. I'm going to have 45 up years. It's statistically unrealistic. Just sit there and say to yourself, all right, I've done really well for 3 years. What are the probabilities? What are the odds that the market's going to be down after having double-digit gains for 3 consecutive years? Go through the history of it and look at it. Statistically, it's possible, but the odds are not in your favor. Look at the market and realize no more rate cuts are coming. Inflation's completely out of control. It's still on the way up. Stop listening to these people on TV. They curate and lie all the time. Healthcare premiums are up. Beef costs are up. Go to the store and shop. Everything's up. Okay, the only thing that's in check is oil prices, please. All right? Go to any restaurant. Go to a New York deli where they charge you $25 for a sandwich. Okay? Even in Chicago, if you want to get some like Asian food, 5 years ago, I used to pay Butterfly is the best Thai food in all of Chicago. Butterfly. There's 4 of them. I got one 2 blocks from here. They know me. I had like an account there. It's awesome. They used to sell a gigantic plate that could feed the 3 of us, me, my wife, and my kid, literally for like $8.95. Now it's $18.95. It's the same size plate. It's the same formula, the same food. Their prices haven't gone up. They just decided they wanted to raise prices because they could, and there's a high demand for it. Be realistic. Inflation's not coming down. It's not ebbing at all. There's no deflation coming. Jobs are being let off. Just put aside the charts and just do what I call like smell the roses. Walk around, talk to people, figure out what's going on in the world, and begin to recognize the market itself is not what it used to be, but that doesn't mean that it can't come down and blow out. They blew out Lulu. They blew out Disney. Okay, they blew out Nike. They're going to come for all of them. It doesn't matter what you think. They're going to get them all of them. They just started getting Procter & Gamble. I warned you at Procter & Gamble at 170. I said, that's a bubble. Told you. They're going to get them all. There's no way to get around it. They get them all. They're going to get this market. Will it be this year? Maybe. Will it be next year? I don't know. But just curb your expectations and start to skip passive investing. Get out of passive. Either move your money overseas to overseas ETFs, or become a stock picker like me and join Genesis Call, because we're doing phenomenal. I will tomorrow. You're going to see my winners. They're going vertical. They're literally going vertical, all of them. Okay. I find my spots and I pick my spots very carefully. We don't own everything, but we own just enough to keep us long delta and keep us happy. All right. Now, two more things to bring up here. Interest rate cuts will be kept to a minimum. I track, a lot of different macro data points, and I know they don't matter in the moment. They don't. But the one thing is, I do listen to Brandon, and when they're on, I do listen to Garrett when he's on. I do listen to Blake. I try to absorb, what they're thinking, what's going on, and I understand the liquidity. I'm just telling you, everybody's banking on the Fed going to cut interest rates and cut interest rates. They don't need to cut interest rates at all. They never needed to cut the last 3 times. Historically, the Fed's cut interest rates for one reason, right? Because it's to backstop the economy from falling out of bed. The economy's not falling out of bed. It's just going through an adjustment period with AI replacing people. People are not starving, although their dollars being stretched, and their pocketbooks being stretched, and their debt, credit cards are being stretched. But they're not, the world's not falling apart. We're in a safer world now than we've ever been. There's still a lot of opportunity out there. But I'm just telling you, the Fed is only cutting interest rates for one reason. Okay, one, to micromanage the stock market. That's it. The Fed was not created to micromanage markets. It was created as a backstop or a crutch to micromanage the economy when the economy slips and falls. So the market and the economy are in completely separate worlds. There's no connection between the two of them at all. So I'm telling you, don't walk in here and tell me that you think we're going to get more rate cuts. At most, we might get one. And this is coming from 3 of the governors who have already said they have 2 governors who don't want a rate cut. They have 1 governor who thinks one is needed. And you have 3 who are flip-flopping, who are saying that we're starting to move towards no rate cuts at all, but they're still hung up on 1 or 2. If the regime change starts in February, they finally get rid of Powell, that is not a solution. That regime change may be, okay, you change the faces, you rotate them. But the fact of the matter is, that doesn't change the fact that the economy it's not 2020. This is not post-COVID. It's not. We're in a completely different world now than we are then. So keep an eye on interest rates. It's TYX CGI or TNX CGI. The TYX is the 30-year. The TNX is the 10-year, although most of the Fed keys off the 2-year. I get it. They do the 2 and 5 split. I do the 10 and 30 split. I follow this, and I go back as far as I can, as the eye will see. And I'll go back, hopefully I can get back 20 years on this. It's got 10. I'm going to actually add the time frame of 20 on this and save it. So here's 20 years. Okay. Click OK. It is not uncommon. It is not unusual for rates to stay up here. The Fed has done almost 4 rate cuts. And look what's happened. The overnight lending rate's going down. That's among banks. But the fact of the matter is those are repos. That's completely different than the economy. Look what's happening here. This has gone up and it hasn't broken stride at all. The bond market is never wrong. The stock market is wrong all the time. It just lies all the time. It misprices stuff all the time. This is not a misprice. This is totally efficient. What this is telling you is, okay, that inflation itself may stay here. You might have a 5 handle going across for years. And if it goes above 5 to 6 because of hyperinflation, if it happens, okay, then all of a sudden you're in real problematic territory, okay? Because that is really going to take a bite out of the stock market. The stock market's hanging on a thread at that 5 handle. But if we go through that on that ascending triangle and we rip through, we get to 6 or 7, all that money is going to go from stocks to bonds because you're going to get 6% yield for a bond with half the risk. That's a fact. So I think this year, a lot of you are going to be very disappointed. I don't think we're getting more than 1 rate cut, if that. Like, I think they're going to visit 1 rate cut in March, April, 1. And that is still a 50-50, probability. And if it turns out they don't cut it, you're going to get none the rest of the year. The market's going to go, well, where do we reach for our cocaine? Where is that high going to come from? Oh, crap. We actually have to go back to fundamentals because there's no fundamentals in this market at all. So I think that's one of my calls for the year. No more than 1 rate cut the entire year. And it's going to shock people. And that is going to put upward pressure on oil and hard assets and drive them even higher. Next on the list, because it's inflationary. And be aware, it's there's a lot more out there than meets the eye than people think. The last call of the year. People have asked me, when is the market going to break down? Don't know. It's not run by smart people anymore. It's all passive investing. 53% of it's all passive investing. Okay, and they're just jacking it up higher. And they wake up every day and go, find me a vertical MACD. Oh, there's a vertical MACD. Me go buy calls. Buy me call. Buy me call. Hey, Dave, buy call. Buy call. Let's do Barstool Dave. It's just a frenzy. Let's just run it up because, I don't know, the algos just buy vertical. It's what they do. So here's what I'm telling you. You're going to know when the market's going to correct, when consumer staples rally. That's the key. And that's where I'm positioned. I'm going to load the boat. And I'm starting to build a strong position in consumer staples. I am. Okay. Consumer staples. I'm not buying Coke because it's expensive. And I'm not buying Procter. And I'm not buying J&J because it's too overbought and overpriced. But you're starting to see some of these consumer staples trade at 6 and 7 times earnings. When consumer staples break out, it will portend or it will confirm a market correction. So what I tell you is, get out a list. Make a list. Make a list of 10 or 15 stocks of only consumer staples and track them like a hawk. You can know who they are. Mondelez. Mondelez is Oreo cookies, and as you saw today, it's Chips Ahoy. Okay, on the way down, market's not ready to come down. It won't. When the hot money skips the high betas and stops chasing the caterpillars and the financials and the tech, and this comes alive, that's the end of your rally. That will be your end. So Mondelez, I'm not ready to buy yet. Okay, there's others afoot right there. SYY. Okay, that one's cheap. That one's hanging on there. I own that. Okay, waiting for that one to turn. Okay, that's another food company. You could also look at other consumer staple companies like Unilever. Now, I'm not buying this one because it's not cheap enough for me, but that one's been acting pretty well. Okay, it's a lot cheaper than Procter and Gamble, but at 21 times earnings, I'm not ready to go there. That's the European Procter and Gamble. So they do hair care products, hygiene products, whatnot. You can go look at what they do. Most of the stuff you buy in stores, they sell. Okay, Domestos, Dove Men Care, Hellman, Comfort, Close-Up toothpaste, Clear Gel, Ben & Jerry's ice cream. They do everything. When these stocks start to rally, the market is simply going to fall apart. That's the key. That's the turning point, because the market doesn't see any sexiness or beta. They're looking at this going, there's no alpha premium. Me no buy. Yeah, but they're so cheap that when they do move and nobody owns them, the sky's the limit because there's no overhead supply on these things. They're everywhere out there, a lot of these consumer staples. And I'm not talking like, AT&T or Verizon. That's not a consumer staple. That's utility. Or NiSource or Southern Company. I'm short those. I'm short NiSource. That's about poised to fall apart. That's a bubble unto itself. Those are utilities. Those are not consumer staples. Another consumer staple might be out there is something like, and I'll bring it up here, is something like General Mills. The market hates this stock. I love it. Love it. when they finish this complete full monthly MACD cycle and that stock turns, hell, at 9 times earnings, that stock's going to run for glory and go straight up. This is where millionaires are made. How do people make millions? Like this. They go down to like, man, Tesla's down 90%, buy it. Meta's down 90%, buy it. FedEx is down 80%, buy it. You'd be retired. Look, this is where millionaires get, you say you become a millionaire. You buy it when they hate it, when they're lazy, when they're complacent, when they do no research, when they don't realize what they have. Okay? Can't buy Under Armour because it's still worth nothing. But start to look at consumer staples, things you buy, things you eat every day. Like Coke, not cheap enough for me. Not. I actually just covered my Coke short. I shorted at 73, 72, 75, covered all of it at 68, walked away on both the option, 100% premium, booked, and I walked away with a few $100. I look for opportunity where I can. But if you can take Coke down to $50, I'm all over that. I'm looking for certain consumer staples. I'm looking at Pepsi. Can't buy Pepsi. Why? Because I'm not going to buy Pepsi unless it gets cheaper. When you got to get Pepsi down underneath a 20 multiple. You get under 20, you got my interest. So I'm telling you, if you're trying to figure out when is the market going to correct, stop looking at tech. It won't help you. Stop looking at financials. Won't help you. As soon as you start to see consumer staples rally, that is the correction coming. How much? Garden variety 10%, at most 20% maybe. But the idea that we go into a bear market, no, because you have to have the S&P, these stocks, at 40 and 50 times earnings to that to happen. If they can compress a lot of these multiples down to like 18 or 19, that'll be sufficient to take them down. The financials would have to really fall off a cliff. I see the financials as starting to build a bubble. We're not quite there, but consumer staples is the place, if I were you, I'd want to be. Things that you consume every single day. I happen to be short Monster beverage. I'm short. But if Monster can actually find itself, I'm bringing it over here, can drop it underneath down to, let's say, 40, I might buy it. But this, okay, that's a short. I don't consider it actually a staple because that's like, that's like rock beverage or whatever you call it. It's like Red Bull, whatever crap. No, that's not something you need to keep yourself healthy. I'm willing to short that. I am short. I'm happy about it. But I can tell you, the consumer staples is the place you want to look and you want to be and you want to hedge, to own some against tech and financials and some of those cyclicals when the market does start to correct. On that note, that concludes my 2-day, Bierman, Professor Bierman, calendar year 2026 prospective market moves. They're not wild, they're not radical, they're not Chicken Little, they're not the end of the world, but they are what I call like realistic, they are conservative, and they are what I call like smart. They're just smart moves, and there's some value behind it. So I'm just throwing that out there. Tomorrow when you come in, I am going to spend time on a Genesis COG because I have stocks that are just blowing through, and I just don't know why a lot of you sit there and don't join. We're just absolutely running amok today on a lot of stocks that none of you will touch it, but we just happen to get on them, and you have to come back tomorrow. You have to come back tomorrow to see the 2 longs that just broke out today. And there still might be some room, and they're not necessarily in the categories you think they are. On that note, you're welcome, Grant Energy. On that note, I've got to turn this over and get prepped for a Genesis COG at 11 o'clock. That's like a 45-minute program that I do on Tuesday, Thursday. Who is going to follow me? Who won't wear the red ribbon? Brandon Chapman is going to take the reins behind me. I'm waiting for Brandon to come in. I don't even know if his camera works. I don't know. Brandon, does your camera work? Let me know, bro, because you know what? I want to keep you in the know. Oh, boy. Here we go again. I'm waiting on this. Brandon Chapman, where are you? You're welcome. Bryce Zander, are you new? Hey, Ship. I see a lot of Batman's been around. Adele's been around here. A lot of you are new. John Fleck, a lot. I can't believe all the new faces here. You got a lot of new people. Ramsey, you're new. You've been around? You've been really quiet in the back. That's good. You don't need to speak up. It's good. New guy here. Merrim is new. All right, so I'm waiting on Brandon Chapman to join the fray. It's 10:31. He's usually not that late. He might be coming from another room. I don't know. But you can see the market starting to walk itself up today. Okay. Little bit here, little bit there. It's starting to walk itself down today. I don't know. What do you guys think? What should I say? Here he comes. Brandon Chapman. I'm turning this over to you and letting you run with it. Where you been, guy?
Right here, sitting at my desk. What are you doing?
Got your camera working.
Yeah, it worked yesterday. I had to reset it, and it ended up working. But now I'm on my other computer that I bought a new cord for, so we're good to go now.
All right, so I'm going to turn this over to you. I got to get ready for a Genesis Cog. Have a great day, Brandon. I've got a ton of breakouts today, all over the place and stuff and I'm withholding it for tomorrow's program. I won't say it today because they got to come back tomorrow to see it.
I mean, yesterday there was a ton of breakouts that are kind of fading. We're just getting that, just not a steady rotation.
No, it's tough. You got to be very selective. All right, now
all right, have a good one.